I'd now like to welcome Elaine Anthony, the Assistant Commissioner, Micro Enterprises and Individuals, to take us through some of the important changes this tax time 2013. They include changes to the health insurance rebate, a range of tax offsets, small business concessions and other important information that you need to be aware of at tax time. Elaine, welcome.
Thanks, Tracy.
There are some private health insurance changes this year that agents and their clients certainly need to be aware of, aren't there?
Yes, from the 2012-13 financial year, the private health insurance rebate will be income tested against 3 income tier thresholds based on either single or family income. This means if taxpayers have private health insurance, the amount of private health insurance rebate they are entitled to receive is reduced if their income was over the threshold income amounts. Those taxpayers who've continued to receive reduced premiums from their insurer may end up with a tax liability if their income was over the income threshold. We have changed the private health insurance policy details question in the tax return to allow us to determine the amount of rebate taxpayers are entitled to receive, and taxpayers will need their annual tax statement from their insurer to complete this question.
And this year the government has certainly expanded the use of income testing. What's the impact of that?
Well, this year the private health insurance rebate, the Medicare levy surcharge and the net medical expenses tax offset are all subject to income testing. This means more taxpayers will be affected by income testing, and if your client has a spouse, their income may also be included in the relevant test. Agents should ensure that they review the income and spouse details sections this year to ensure that their clients receive the correct entitlement.
There have been a number of changes in relation to tax offsets, so let's start with the net medical expenses tax offset. The government announced in last year's federal budget that it would introduce an income test for the net medical expense tax offset from 1 July 2012. At what income levels do the changes take effect?
Taxpayers claiming a tax offset for their net medical expenses will be income tested to determine their eligibility and entitlement. Taxpayers will be affected by this change if they have an adjusted taxable income above $84,000 if they're single or $168,000 if they're a couple or family.
Will this affect the family threshold?
Yes, the family threshold will increase by $1,500 for each dependent child after the first. If your adjusted taxable income is above these thresholds, you can only claim an offset of 10% of your net medical expenses over $5,000.
And what about if your adjusted taxable income falls below those income thresholds?
If their adjusted taxable income is below these income thresholds, they're not affected by the change. They can claim an offset of 20% of their net medical expenses over $2,120.
Okay. There's also been a change, Elaine, to the mature age worker tax offset.
Yes, that's correct. As part of the 2012 federal budget, the government announced that for 2012 and 13 and future years, eligibility for the mature age worker tax offset will be confined to taxpayers born before the 1st of July 1957. So to be eligible in 2012-13, you must be an Australian resident for tax purposes, be born before the 1st of July 1957 and have received net income from working within certain limits. It's important to note that the mature age worker tax offset can only reduce a tax liability to zero. Any unused portions cannot be refunded or transferred to another taxpayer.
As a result of the government's household assistance package, the seniors and pensioners tax offset, or SAPTO, is going to replace the Senior Australians tax offset and the pensioner tax offset.
That's correct. The pensioner tax offset is no longer available, and taxpayers who previously claimed this offset will now be able to claim a more generous offset known as SAPTO. There's also a beneficiary tax offset available to pensioners who receive certain government payments. If a person's entitled to both of these offsets, they'll only receive the one providing the greatest benefit. In mid-July 2013, a new combined beneficiary tax offset and seniors pensioners tax offset calculator will be available to estimate entitlements. Clients who are entitled to SAPTO will generally not have to lodge an income tax return if their SAPTO covers the amount of tax they have to pay. However, there are reasons why taxpayers may still need to lodge an income tax return. The 2012-13 Do I Need to Lodge calculator, available from July, will help determine if lodgement is required. Agents can find the calculators and more information on our website at ato.gov.au www.taxpayer.gov.au/calculators.
There are changes to the dependent spouse tax offset this year also.
Yes, if you have a spouse born on or after the 1st of July 1952, you can no longer claim a dependent spouse tax offset. There are other changes to dependent tax offsets which, at the time of filming this webcast, are not yet law. Agents will need to go to ato.gov.au/instructions 2013 for more information.
Now, a reminder that there have been changes to the tax-free threshold.
That's right. From the 1st of July 2012, the tax-free threshold increased to $18,200. If agents have clients whose taxable income is under the tax-free threshold, there are reasons why they may still need to lodge an income tax return.
In what circumstances might a taxpayer still need to lodge a return?
Well, the most common reason would be that the taxpayer has had pay-as-you-go withheld from payments received during the year. Agents and their clients can, from July, use the 2012-13 Do I Need to Lodge calculator located on our website at ato.gov.au Do I Need to Lodge to help determine if lodgement is required.
There are a number of fairly important changes for the 2012-13 income year that affect businesses with a turnover of less than $2 million. Take us through those.
That's right, Tracy. The 4 key changes for small businesses are, firstly, an increase in the threshold for the instant asset write-off. This means an immediate deduction will be available for most depreciating assets purchased for less than $6,500. The second change is an accelerated initial deduction for the cost of purchasing a motor vehicle used in the business. The third change is the removal of the long life pool. This means there's a single pool rate for assets via the general small business pool, regardless of the useful life of the asset. And lastly, the removal of the entrepreneur's tax offset.
You mentioned a faster depreciation for small businesses buying motor vehicles. What effectively will this mean for small businesses?
Well, Tracy, for the 2013 income year, there are new rules for small businesses that buy a motor vehicle for use in their business. Where a vehicle is used for business, the cost of the motor vehicle is added to the general pool. But unlike other assets, the deduction is now up to $5,000 plus 15% of the remaining amount in the year of purchase and then 30% for later years. So if a motor vehicle costs $20,000 and is used exclusively in the business, then under the new rules, the deduction in the first year will be $7,250. Under the old rules, the deduction would have been only $3,000. Agents wanting information can visit our website at ato.gov.au/SB concessions.
A number of changes have also been made to the company partnership and trust returns for this year.
Yes, that's right. The ATO has made several improvements to make it easier for taxpayers to comply with their reporting obligations. We've removed 31 labels from the company, partnership and trust returns. We've moved an additional 10 labels from the company and trust returns to the international dealing schedule, so they only need to be completed by those involved in international dealings. We've also decommissioned the capital allowances and personal services income schedules and included a smaller number of labels about these topics on the company, partnership and trust returns. And finally, the capital gains tax schedule has been shortened in length.
Okay, why were so many changes made?
The improvements were developed in consultation with businesses and tax agents as part of our ongoing efforts to reduce the amount of information taxpayers have to report. Tax agents can find out more information about the changes on our website by searching for Tax Time 2013.
All right. Now, new laws improving access to company losses have been introduced to Parliament?
That's right. However, the legislation hasn't been passed yet. In preparing for the passage of legislation, we have already made adjustments to the 2013 company tax return, losses and consolidated losses schedules to include labels for carryback losses. We ask that agents do not claim the loss carryback offset until the law has received royal assent. To find out whether the legislation has been passed and received royal assent at a later date, visit our website and search for carryback losses.
Now, you also wanted to remind taxpayers about correctly declaring all income earned from overseas sources.
Yes, generally taxpayers must declare all income they receive from foreign sources in their income tax return. Foreign income includes business income, foreign employment income, most pensions and annuities, bank interest, dividends, royalties, rent, capital gains and personal services income. From the 1st of July 2009, there's a limited exemption for foreign employment income from particular types of foreign service. Taxpayers will need to check if their foreign employment income earned continues to be exempt following the amendments to Section 23AG of the Income Tax Assessment Act 1936. Foreign employment income that is exempt from tax in Australia generally still needs to be included in their tax return. However, there are limited exceptions where this income does not need to be included in their tax return. If taxpayers have paid foreign tax in another country on income they received, they may be entitled to an Australian foreign income tax offset that provides relief from double taxation.
We spoke in our last webcast about requirements for individual refunds. With tax time just around the corner, you wanted to remind tax agents to ask their clients to provide their bank account details.
That's right, Tracy. With tax time just days away, we want to remind agents that from the 1st of July, bank account information has to be included to lodge individual income tax returns with an expected refund through ELS. We are encouraging tax agents to remind clients to not only bring the usual paperwork, such as receipts, logbooks and statements, but also to provide their bank account information.
Are there restrictions on the type of bank accounts that can be used?
Any valid Australian bank account with a BSB account number and name is accepted. In fact, many agents are currently using their trust account details as a way of managing their clients' refunds. Tax agents can draw down a list of refunds that have been deposited into their trust accounts to assist with reconciliations. This is called the EFT reconciliation statement, and agents can request the report using the request report form in their ELS software. We've heard from agents that EFT refunds are a better way to get their clients' refunds quickly. We understand there may be some limited circumstances where a tax agent doesn't use a trust account and their client is unable to provide Australian bank account information. We're committed to working with these tax agents in these situations. They can phone us on 13 72 86, fast key code 1312, and we'll help them to lodge.
What can you tell us about this year's service standards?
Yes, I'd like to remind agents that returns lodged electronically this year will result in most refunds issuing within 12 business days. If the return is incomplete, incorrect, needs checking or relates to a prior year, it may take longer to complete the process. Agents can find further information on our commitments to service and our performance on our website by searching for our service standards.
And just before we go, a last word to agents on, I guess it's sort of how to support and manage their clients at this time of year.
Last year, we promoted tips to assist tax agents to have their clients come to them with information needed to lodge their clients' returns. These have been updated with Tax Time 2013 in mind. They will assist setting up appointments with your clients. In particular, tax agents should remind their clients to bring along their personal identification, bank account details, Medicare card or number, private health insurance statement, spouse details including details of income. In addition, agents should ensure they continue to be vigilant in protecting their online security and their clients' information. Attention to proper security procedures, especially during busy periods, will help stop potential fraud. Tax agents have told us the following best practice tips. Avoid sharing passwords and login details. Change passwords and remove user access when staff members leave. Lock computer screens when leaving desks. Secure tax records when they're not in use. Avoid circulating tax file numbers in emails unless it's absolutely necessary. Ensure your computers have up-to-date security software, including antivirus, anti-spyware, anti-spam and firewall protection.
I know this is a very busy time of year for you, Elaine, so we do appreciate you joining us today.
Thanks very much, Tracy.
Elaine Anthony, Assistant Commissioner, Micro Enterprises and Individuals.